Assalamualaikum warahmatullahi wabarakatuh and very good day. Today, we from Group 1 would like to present our group project. Before we dive into the detail of our analysis and finding, let me introduce myself and my team. My name is Muhammad Akib Abdul Hamid. And this is our group members. Next, introduction. Our first article. For our first article, the title is Post-Implementation of MFRS 8 Operating Segment on a Listed Firm in Malaysia, written by Jalila Johari and published in the SHS web of conference in 2017. The study focused on companies listed on Bursa Malaysia. We choose this article because it discussed the implementation of MFRS 8 operating segment after the standard became mandatory in Malaysia. The study also evaluates the level of operating segment disclosure among Malaysian listed companies and examine whether they comply with the disclosure requirement under MFRS 8. In addition, this article explains how operating segment disclosure improves transparency by providing more detailed information about a company's business operations. And this information help investor and other stakeholders better understanding the company's performance and support better decision making. Therefore, this article is highly relevant to the financial reporting requirement under MFRS and IFRS. Next, summary. This study examined 250 companies listed on Bursa Malaysia after the implementation of MFRS 8. The main objective was to evaluate the level of operating segment disclosure and determine whether companies comply with the new reporting requirements. The researcher analysed the company's annual report to examine how operating segment were identified and whether companies disclosure information about their chief operating decision making or CODM. Overall, the study found that disclosure practice differ among companies because each company has different business activities and management structure. It's also found that many companies still provide limited disclosure regarding their CODM, showing that there is still room for improvement. Next, key finding. Based on the finding, the study showed that 90% of companies disclose business segment information, indicating that most companies comply with the requirement under MFRS 8. However, the level of geographical disclosure was much lower. Only 53% disclose customer information by geographical location, while 45% disclose geographical information about their asset. In addition, only 33% of the companies clearly identify their chief operating decision maker or CODM. This is important because the CODM is responsible for reviewing operating performance and making decisions on resource allocation under MFRS 8. Overall, the study conclude that operating segment disclosure has improved after the implementation of MFRS 8, but the level of disclosure is still inconsistent across companies and can be further improved.
Now, I would like to explain why operating segment disclosure is important. Firstly, operating segment disclosure improves transparency in financial reporting because it provides detailed information about each business segment instead of only presenting the company's overall financial performance. This allows stakeholders to better understand how different parts of the business contribute to the company's results. Secondly, it shows the performance of each operating segment under MFRS 8. Companies use the management approach, meaning the information disclosed is based on the same reports reviewed by the Chief Operating Decision Maker or CDM. This gives investors a clearer understanding of how management evaluates performance and allocates resources. Operating segment disclosure also helps investors compare different business segments and identify which segments are more profitable or carry higher risk. This supports better investment decisions. However, The article found that although most companies disclose business segment information, many still provided limited geographical information and did not clearly identify their CODM. Therefore, more complete disclosure is important because it reduces information system asymmetry, improves transparency, and helps stakeholders make better economic decisions. Next, operating segment disclosure provides several important benefits to stakeholders. For investors, segment information makes it easier to evaluate the performance and profitability of each business segment instead of relying on the company's overall financial results. This helps them identify potential risks and make better investment decisions. For management, the information supports better resources allocation and performance monitoring because it reflects the same report used internally for decision making. This enables management to improve business strategies and evaluate each segment more effectively. For regulators, complete disclosure makes it easier to monitor compliance with MFRS 8 and promote stronger corporate governance through greater transparency and accountability. In conclusion, the article showed that the implementation of MFRS 8 has improved operating segment reporting among Malaysian listed companies. However, companies still need to improve disclosures, particularly regarding geographical information and the identification of the CODM. By providing more complete segment information, companies can enhance transparency, strengthen investor confidence, and improve the overall quality of financial reporting.
Assalamualaikum. I will continue of the conclusion of the from Article 1. In conclusion, the study shows that Malaysian listed companies have generally adopted MFRS 8. However, some important disclosures, especially regarding geographical information and the CODM, are still incomplete. Therefore, companies should continue improving their disclosure practice to enhance transparency, increase investor confidence, and provide higher quality financial reporting. Next, I will present about Article 2. The title is Reputable Audit Quality Attributes and Related Party Transaction Disclosure. This article was written by Nur Hidayah Wa'ad, Nurul Nashu Hashim, and Muhammad Mohid Rahman, and was published in the International Journal of Economics and Management in 2021. We selected this article because it explains the importance of related party transaction disclosure and how audit quality influence the transparency of these disclosures under MFRS 124.
Assalamualaikum warahmatullahi wabarakatuh. My name is Lutfi Rahman bin Zulkifli. Now I will explain about what are related party transactions. Okay, related party transactions or RPT refer to transaction between a company and its related parties. Because these parties have a close relationship with the company, the transaction may influence business decision or create conflict of interest. Related parties include parent and subsidiary companies, associate and joint ventures, director and key management personnel, as well as major shareholders. Okay, common examples of RPT includes the sale or purchase of goods, loans, guarantee, asset transfer, and management services. Under MFRS 124, companies are required to disclose this transaction to improve transparency while enabling investor and other user of financial statement to identify potential conflict of interest. Okay, now about summary of the article. This article examines whether audit quality improved the disclosure of related party transactions or RPTs among Malaysia listed company. The researchers conducted this study because the level of RPT disclosure had declined over the years, raising concerns about transparency and the proper disclosure of related party transactions. To investigate this issue, they analysed 1,249 observations from Malaysian-listed companies between 2013 and 2016. The findings show that high-quality auditor improve RPT disclosure, while industry specialist auditor further enhance disclosure quality. Interestingly, international non-Big Four audit firms had a stronger positive influence on RPT disclosure than Big Four audit firms. Overall, the study concluded that better audit quality improve transparency, strengthen corporate governance, and support compliance with MFRS 124. Okay, based on the study, there are five main findings. First, high-quality auditor improve the disclosure of related party transactions because they are committed to maintaining their professional reputation. Second, industry specialist auditor provide better RPT disclosure as they have greater expertise in identifying complex related party transactions. Third, international non-Big Four audit firms were found to have a stronger positive impact on RPT disclosure than Big Four firms, as they may put greater effort into maintaining their reputation. Okay, fourth, better disclosure reduce the risk of abusive related party transaction by increasing transparency. Finally, the study concluded that high quality strengthened corporate governance and improved the financial transparency, giving investors greater confidence in the company's financial reporting. Overall, the study showed that audit quality plays an important role in improving RPT disclosure and promoting transparency among nation-listed companies.
Now, I would like to explain why related party transaction or RPT disclosure is important. RPT disclosure is important because it improves transparency and accountability in financial reporting. Although related party transactions are common and can support normal business operation, they may also create conflict of interest if they benefit directors, managers, or controlling shareholders instead of the company. By closing this transaction, investors and regulators can better understand whether they are conducted fairly and in the company's best interest. This helps reduce information asymmetry because it's between management and stakeholders and lower the risk of fraud and earning manipulation. The article also found that companies audited by reputable international and industry specialist auditors generally provide better RPT disclosures. Therefore, proper disclosure under MFRS 124 helps strengthen corporate governance, protect shareholders, and support better investment decisions. Next, benefit to stakeholders. Related party transaction disclosure provides several benefits to different stakeholders. For investors, transparent disclosure helps them assess whether related party transactions are fair and identify any potential conflicts of interest before making investment decisions. For management, proper disclosure encourages ethical behavior and greater accountability because important transactions are reported openly. This also improves the company reputation and strengthens corporate governance. Finally, regulators and auditors benefit because complete disclosure makes it easier to monitor compliance with MFRS 124 and identify transactions that may involve higher risk. Overall, transparent disclosure increases trust in financial reporting and protects shareholders' interests. In conclusion, this article shows that audit quality plays an important role in improving related party transaction disclosures. The study found that companies audited by reputable international and industry specialist auditors generally provide more complete and transparent disclosures. This helps companies comply with MFRS 124 and improves the reliability of financial reporting. Although related party transactions are not always harmful, inadequate disclosure may create conflict of interest and reduce transparency. Therefore, companies should continue improving both their disclosure practice and audit quality to strengthen corporate governance, increase investor guidance, and provide more reliable information for stakeholders.